How is everyone doing today? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. So today we're going to be talking about de novo bank activity. This is a topic that is near and dear to my heart. De novo banking activity has been severely depressed since the Great Recession of 07, 08, 09, and has in a lot of ways never really recovered from that. Part of that has to do with industry dynamics, but the major part of that really has to do with the regulatory burden and just all the rules and different things that have to be complied with in order to secure a bank charter, which again is the de novo. It's basically startup banks going through the startup process, if you will. So what we're going to examine today, we're going to take a look at a recent blog post from PCBB, because now Congress may actually get involved in this topic and maybe see if they could try to do something to help. But I also want to run through a series of articles with everybody today, just to give everybody a little bit more background on what has been taking place with de novo bank activity over the last 2 years. And if you hang with me to the end, I think you'll find this rather interesting. So let's go here. This is the PCBB blog post called "New Bank Formation May Get a Boost from Congress." So a bill to boost new bank formation could help communities that have seen gaps in banking services arise as a result of the shrinking number of community banks. So, and just to do a quick run through on this, we'll come back to this in a minute, but I love how it starts out by talking about in the 1950s in Levittown, Pennsylvania. Levittown, Bucks County, not far from where I live. I'm not in Bucks County. I'm in near a neighboring county. But definitely, I love the fact that that's the story they started with, is a little hometown feel to it, if you will. But then it starts talking about the importance of community banks. Yes, it's, getting de novo activity going is highly critical. And then it talks about the highs and lows of de novo formation, and then what the banking bill will do, capital requirements, modified business plans, rural charters, and then finally research. So like I said, we'll come back to this in just a second and get a little bit more depth in that. But first, I just want to run through a couple of these articles here real quick. So this is from March 6th of 2023, and this says most de novo banks from 2017 through 2020 are profitable in 2022. So many of the newest banks in the U.S. had a profitable year in 2022 as higher interest rates pushed margins higher, while credit quality remained largely benign. Of the 26 de novo banks established between 2017 and 2020, 20 posted a positive return on average assets for the full year of 2022, according to S&P Global. As might be expected for any new business, none of the de novo banks established in 21 or 22 were profitable in full-year 2022, except for one, Ohio-based Riverside Bank of Dublin. Turned a profit in both the third and fourth quarters, but posted a full-year negative ROAA of just 0.19%. Assets at the bank increased roughly 57%, which is, hey, good for them. But again, keep in mind, this is a couple years ago. So again, 2018 de novo banks tie for most profitability. And then we see here kind of a list of the banks. So banks here established, we see here, a couple of banks established here in 2018, 2017, 2019, 2020, 2019, obviously the economy was really humming there during the first Trump administration. So you could kind of see how you see the build taking place here. 2017, just a couple, but then 2018, we get 6, and then, 2019, we get a bunch more. 2020, obviously COVID, but then, we had 2021, get a few more. 2022 kind of bounce back, good year. Not a lot in 23 and hardly any in 24. And that's what we're going to see here in a second. So here's a chart showing the number of de novo banks established since 2017. So you can see here, again, 17, 4, 2018, 6, 2019, 13. And then obviously COVID year 5, 2021 still bouncing back 8, 2022 14. But then we drop to 2023 and just 1. And we'll see that here in just a second. How 23 and 24 were not good years for establishment. And these, for everybody to understand out there, these numbers are extremely benign, meaning they are very low. If you go back to, say, the period between 1995 and 2007, I mean, there were 150, 175, 200 banks a year that were brand new banks starting up every single year. And what was happening was that was offsetting the amount of consolidation in the industry. So if you had, if you formed 150 new banks and there was, 200 bank mergers, so you had kind of a net effect of losing 50 banks. So the number was still coming down, but nowhere near as fast after the financial crisis in 07, 08, 09, which basically, just really killed the de novo activity. And thus, as you averaged, 200, 250 bank mergers a year, the number of banks in the industry really began to shrink. Now, obviously, de novo activity, it's great for investment bankers, love it because the investment bankers love doing mergers, but they also love doing new startup banks too, because they got to raise capital for those new startup banks. They also got to provide them a whole lot of consultation and guidance as they get rolling and get up and going. So, there's definitely a cottage industry, if you will, around startup bank activity that's been very muted. So if you could get de novos going again, that could be very good for many different aspects of the banking industry. But let's continue on here for a second. So we're going to July of 2023. So investors sidestep de novo process by scooping up banks amid deal doldrums. So private equity and investor group bank acquisition activity has remained steady amid the ongoing deal doldrums, with current bank valuations and the challenges of starting a de novo bank making this an attractive alternative. So what was happening here was that it was much easier to just buy an existing bank and take over their existing charter instead of going through the whole de novo process trying to start the bank from scratch. So in other words, you find a small bank, say you find a bank that's 150, 200 million in asset size, that has been around for maybe a couple of years, already has their bank charter, and you just simply buy them up. You buy them up and then you infuse them with basically the capital. Like if you were going to raise 50 million, 100 million in new capital to start a new bank, now you still raise that capital, but you just simply purchase the existing bank charter and you infuse that capital and the new management team into that existing structure, if you will, and then just grow from there. And that was one of the real big things that we noticed happening in the industry over the last, 4 or 5 years, basically. And then we go to another article. And now this is March. Now we've gone basically a year ahead to March of 2024. So challenging environment pushes down 2023 de novo bank count to the lowest in years. So the number of U.S. de novo banks formed in 2023 declined to its lowest in years as the banking industry grappled with a challenging operating environment. So during the year, only 4 de novos were established, compared with 14 in 2022 and 8 in 2021, according to S&P Global. The de novo account appears to run counter-cyclical to profitability in the bank space. For example, we saw very few de novos in the years following the global financial crisis. Recently, the banking environment has again become challenging, even for well-established banking institutions, the analyst said. Thus, the barriers to entry into the banking space are that much higher, and it makes sense for the number of de novos to decline. So now, again, 2023, we're just looking at 4. So 4 for the whole year. And then it gets into kind of like the ones we had a Delphi Bank, which was in Columbus, Ohio. We had Beach Cities Commercial Bank, Community United Bank, and then Icon Business Bank in Riverside, California. So those were the 4 established in 2023. And now let's jump forward here again. Now we're into April. This is a month later. Bank M&A de novo activity down due to regulatory scrutiny, says the Fed's Mickey Bowman. So reduced de novo and bank M&A activity is largely due to regulatory scrutiny, according to Federal Reserve Governor Michelle Mickey Bowman. Both U.S. bank and M&A and de novo activity have been depressed recently. U.S. bank M&A reached a 23-year low in 2023 with under 100 announcements, and the slow pace has continued into 2024 with just 28 announcements through April 1st. De novo activity has been even slower, with just 4 new banks last year, the lowest total in years. Bowman expressed concern that regulators' intensified scrutiny has contributed to the slowdown in activity. I am concerned that many of these actions may actually undermine the long-term viability of banks, Bowman said. Now, obviously, I've talked in other episodes about merger activity and about how basically the regulators just dramatically slowed down the process. They gummed the process up basically to the point of just killing M&A transactions, and they basically did the same thing with de novos. Bowman also believes the recent lack of de novo bank formation is due to regulatory hurdles. Although interest rates and competition for management affect de novo formation, perhaps the most important factor that influences de novo bank formation is the regulatory and supervisory framework, Bowman said. The application process can be a significant obstacle to de novo bank formation, she added. While waiting for approval, which usually takes more than a year, they can rack up startup expenses, have difficulty with recruiting and retaining management, and have challenges raising more capital. To skip that process, investor groups have increasingly turned to bank acquisitions. In other words, the process that I just described. Moreover, while the standards to which a new bank will be held in the review process can vary by business model, overall standards are opaque and have shifted significantly over time, she said. The uneven regulatory standards are evidenced by the lack of de novos formed in recent years, more banking activities shifting out of the banking system, and the uptick in banks partnering with non-banks through banking as a service, she said. This dynamic is harmful to the banking system and over the long run will create a void in the banking system, a void that may contribute to a decline in the availability of reliable and fairly priced credit, the absence of financial services in underserved markets, and the continued shift of banking activities beyond the regulatory perimeter. So again, I think great comments from her. And then this last article here. So now we're jumping to June of 2024. So investor acquisitions of U.S. banks outpacing de novos as challenges mount. So investor acquisitions of banks are outpacing de novos as bank hopefuls find it faster and less expensive to buy an existing bank. This trend is likely to continue as hurdles such as the price of starting a new bank and regulatory scrutiny make the de novo route less attractive. One thing that might need to come back a little bit is the required capital to start a de novo bank. You're looking at $30 million plus. Matthew Veneri, head of investment banking at Janney Montgomery Scott, said at the recent Community Bankers Conference hosted by S&P Global Market. When you can go buy an overwhelming majority of publicly traded banks at book value or a discount to book value, from an investor standpoint, it just doesn't make sense to start a de novo bank. And then this goes into kind of like some of the regulatory hurdles. So, but then it goes into, de novo hurdles. So establishing a de novo bank is an expensive and time-consuming process as the cost of technology jacks up the initial capital needed, and regulators look at these applications with a sharp eye. As such, it is often easier and cheaper for investors to acquire an already established bank, even if it needs some cleaning up, rather than raise the funds required to start a de novo bank and wait for regulatory approval. It's a little easier to fix than to do it from scratch, said R. Hill Wombley, the co-founder and CEO of Life Steps Bank and Trust. So there you have it. So there are some of the main, things there. So in other words, when you go, and then we'll go back to the main article here for a second. So when you go back to when you go to start a de novo bank, the minimum capital requirement to start a new bank is $20 million. That's the minimum. If you really want to give yourself a decent shot, you probably need to raise 30 million plus. And that's exactly what the last individual was alluding to in those comments, where they said, hey, you're going to need basically $30 million to get this thing off the ground. So, and your pool of investors, when you look at securities laws and other things that have to be followed whenever you're doing any type of a capital raise, you have to, security Ds, all this different rules, regulation, different things you have to follow. Your investment pool is only going to be probably somewhere in the neighborhood of 200 to 300 investors, maybe a little bit more, and they all have to be they all have to be accredited investors, which again adds another hurdle to that. So in other words, meaning very rich people. Trying to get 20, 30 million or plus money out of just a small pool of 200 or 300 individuals, that's a tough lift. So like I said, just so everybody kind of understands that. So, okay, so let's go back to the main article here real quick for a minute. Again, they started talking about Levittown. But let's pick this up here. So it says similarly to how building a home has become increasingly complex and time-consuming, starting a new bank has become a long and challenging process in recent years. It could take anywhere from 1 to 2 years to win federal approval and then launch. The hurdles are so high, particularly the capital requirements, that 19 pending de novo banks withdrew their FDIC applications from 2022 to 2023. De novo banking could finally get a boost from a bill introduced in January, the Promoting New Bank Formation Act, which aims to stimulate the sluggish pace of new bank formation and encourage the creation of new credit unions. A host of banking organizations and executives have endorsed the idea of more bank formation, including the acting chair of the FDIC, Travis Hill, who said in January that he wanted the FDIC to encourage more de novo activity. Again, the importance of de novo banks. The FDIC has long viewed de novo banks as important for stimulating and sustaining the community banking sector, particularly at a time when consolidation is reducing the number of community banks. The U.S. once had about 15,000 community banks go back to 1980. About 15,000 banks in the country. There are now basically about 4,500 banks in the country. It also sees new bank formation as a way to fill voids in banking markets and provide services to communities that are overlooked. Community financial institutions are important providers of credit to small businesses, and their declining numbers reduce the options for small businesses. Now, if anybody has ever heard of the concept of a food desert, there is also a concept now of a banking desert. So in other words, there are rural communities out there that have lost all their banks, and people have to drive 30 miles, 40 miles to get to the nearest bank branch. That's obviously doesn't work and is highly inconvenient for a lot of people. So that has become an issue. And that's part of the reason why we need more de novo startups. So then it says the highs and lows of de novo formation. So hundreds of new community banks were chartered in the first decade of this century, yet activity ground to a halt with the 2008 credit crisis and subsequent passage of the Dodd-Frank Act in 2010, which created new regulations that made the charter process more difficult. From 2010 to 2023, there were fewer than 6 new charters granted annually. At the same time, banking consolidation heated up. FDIC data shows that voluntary mergers increased from about 73 annually in 2011 to 162 annually in 2014. The emerging gaps in banking services are most noticeable in rural areas. For instance, in Mississippi, no new banks have formed in more than 15 years. Meanwhile, the state lost about a third of its banks during that time, with the number dropping from 97 to 62. The new banks that did launch have so far been gaining traction. For example, Beach City's commercial bank opened with 2 branches in Southern California, seeing an opening in an area where there has been extensive consolidation. Zenith Bank and Trust opened in Phoenix in 2023, joining a trio of other new banks that have opened in areas in the recent past. I would also add to that, there is a bank in Pennsylvania, I believe the last new startup bank that Pennsylvania had a few years back, called the Bank of Bird in Hand, which has a very interesting business model because they primarily serve the Amish community here in Pennsylvania. So, and that has proven to be a very successful operation for them. And the Bank of Bird in Hand, which is in Lancaster County, Pennsylvania, if you want to check them out, very interesting bank with a very interesting model. I'll probably have to do an episode on them and share that information. So the new banks that did launch, again, we covered that. So what the banking bill will do? So this new bill aims to shore up the ranks of community banks by easing the federal regulatory burden on new formation. Here's a look at the main points in the bill and how it could encourage new bank formation. So number 1, capital requirements. So the difficulty in raising enough capital to meet requirements has derailed more than a few formation efforts. The banking bill would provide some breathing room. Instead of having to meet capital ratios at launch, the bill would give de novos 3 years from launch to reach the required amount through a phase-in capital requirement. So that I like that. That might actually work. Number 2, modified business plans. So startup banks can realize shortcomings in their business plans once they launch, but modifying business plans for a de novo now requires a lengthy and cumbersome approval process. The bill calls for regulators to design a new, more streamlined process. Yes, absolutely. Number three, rural charters. So in rural communities that face financial challenges, the bill proposes a lowered leveraged ratio. Communities would have to be qualified for the reduced rate by regulators. In addition, agricultural loan concentration limits would be eased in certain rural areas. Number four, research. Banking agencies would be required to report to Congress on causes for the low number of bank charters over the last decade and suggest ways to promote more. So although parts of the South and Midwest have the highest percentage of unbanked households in the nation, many areas across the country have banking deserts. To help identify underserved areas, connect with local resources such as community organizations, nonprofits, and government agencies, or use the new FDIC tool that identifies unbanked rates by geography. With the number of community banks declining and new charters remaining scarce, policymakers and industry leaders continue to debate how to address the challenges of de novo formation. The Promoting New Bank Formation Act is one approach that seeks to ease regulatory hurdles. While it remains to be seen how effective these measures will be, one thing is clear: ensuring access to community banking is critical for small businesses, rural economies, and underserved communities. So yes, I think this is a giant topic for the banking industry. And another thing I will say is that, one of the problems that the banking industry has is for young people, like, what is your career path? What is your career trajectory? And I have often maintained that in banking, there are two types of people. There are big bank people and there are small bank people. And for small bank people, one of the best ways to move up and to get into the C-suite is through the establishment of de novo banks. You become a chief lending officer, or a chief credit officer, a chief information officer, or a chief retail officer. And then maybe one day, after being at that bank for a while, and if the bank is successful and it can grow, maybe you could get a shot at becoming the COO or the CFO or the president or the CEO. Or maybe join the board, maybe become chairman of the board. But with the lack of de novos, it's very difficult in the industry. I think one of the big, and again, this is also why you've seen a lack of training to a certain extent in the industry, because as the industry continues to consolidate, why do you need to train people? Because they're not really going to be going anywhere, because there's not really a career path forward. So I think it is very imperative for the health of the industry that basically we get de novos going again, and we get a healthy number of de novos going every year. I mean, I would love to see 50 de novos started every year. I would love to see that. Whether or not that could come to pass, I don't know, but we'll see. But again, hopefully, like I said, I hope people found this episode rather interesting, because again, it's a topic that's near and dear to my heart. And with that, I will wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as it always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below. And as always, make sure to check out some of the other content, other videos on the channel. And I will be back to see everyone again real soon. Thanks a lot.